focus to some pharma stocks. Analyst views are split on this domain as Piramal Pharma has strong 92% buy ratings with 44% upside potential, but year-to-date gains are just about 33%. Meanwhile, Laurus Labs is up about 63% this year, yet offers only 9% more upside. Let's get my colleague Varsha Chandani to explain the gap.
I'm going to talk about two stocks. One is Piramal Pharma, which is most liked stock according to analysts, but is still underperforming, and Laurus Lab, which is disliked by the analyst per se, but has outperformed a lot. So let me start with Piramal Pharma. If you see, buy ratings is at 92%. Return potential for this stock is 44%, but the year-to-date return has been negative 33%. Let's see why, what went wrong for the company. If you see Q2 EBITDA and PAT misestimates, there was a higher operational cost as well, and also talking about the headwinds, the CDMO growth impacted due to high base last year, and the hospital generics remain soft due to supply issues for the company. Talking about the headwinds, increased competition in one of their products also impacted the company, or will impact in future per se. Now, talking about the guidance reset, so FY26 is expected to be flat, and they've lowered their margin guidance to low teens versus high teens expected earlier. Now, H2 is expected to be meaningfully better versus H1, but this is, correct across, positive across all the pharma companies. Now, but why the stock has underperformed? One is, if you see, the stock is down 33% year to date, but there's strong upside potential, and hence, analysts are bullish on the stock because the valuation provides a good comfort. But the overall, if you see, the execution remains an overhang for this company. Talking about Laurus Lab, most disliked stock as per the analyst, because only 41% analyst says buy with return potential of negative 9.1%, but stock has given almost 63% year to date to its investor. Let's see what went right for this company. If you see Q2 surprises, so revenue, EBITDA and PAT, there was a beat across all this, and also if you see, let's see what the drivers for the outperformance. If you see, there was a strong formulation sales which was backed by ARV business, and the commercial mix also aided profit margin for the company on the back of CDMO. Now, operating leverage also kicked in post a weak cycle for Laurus Lab. Now, talking about the road ahead, the ARV business is expected to clock in 2,500 crore for FY26, and also good growth when it comes to animal and crop science CDMO as well. And large capex and Vizag land allotment is the next growth driver for the Laurus Lab. Now, but why the stock has outperformed? Because of the earnings upgrades that the company has seen, and modest improvement has also driven, re-rating for this company. And why analysts dislike Laurus Lab? Because the stock has given already 63% returns to its shareholders, so limited room for upside over here. So, these are two stocks wherein analysts are bullish, but the stock has performed otherwise.